Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for March 12, 2023. First of all, I just want to say I hope you guys had a great trading week. It was a very busy week, explosive non-farm. Next week, we're looking towards the inflation data, the CPI and PPI data. So there's a lot to come up today, and you're in for a special treat. We're going to have Gregor Horvat, our Elliott Wave analyst. He's on the Forex Analytics team. From time to time, he does the week ahead videos, so you're going to really enjoy the analysis from Mr. Gregor Horvat. You can see him right here. He's going to give you, like I said, an Elliott Wave view of the market, so make sure you all stick around. But before I go, I just want to say, if you haven't had a chance to try out Forex Analytics, make sure you do so. It's only $1 for 10 days. When you try us out, it's $1. Download the mobile app. Okay, and because when you get the mobile app, you're going to get all the notifications, you're going to get all the analysis, you're going to get the Elliott Wave analysis, the harmonic analysis, basic technical, all sorts of different views. And then also you'll be inside of our chat room. Our chat room is one of the most active chat rooms in the markets, and it doesn't matter if you want to go in general chat, learn about the S&Ps, trades room, active day trading room, news and research, Flowonomics, which is our macro room. You even have a Spanish chat room. So make sure you check out Forex Analytics. Like I said, it's only $1 for 10 days. Make sure you download the mobile app so you have all of our analysis right at your fingertips. All right, guys and gals, enjoy today's analysis with Mr. Gregor Horvat.
Hello traders, hello everyone, my name is Gregor Horvat and welcome back to our week ahead video. After a long time, Blake is away, so I will walk you through my charts and through my analysis and cover some of the important stuff. But if you're not our member at Forex Analytics yet, you have chance to get a free, not free, but 10-day access for only $1. Okay, so what's going on? Well, we have seen risk off mode last week. First, it came after hawkish Powell on Tuesday and Wednesday, and then we had jobs number quite good, but unemployment rate came high to 3.6%. So there were some bets that maybe Fed will do 25 basis points rather than 50. However, Powell said that inflation figures that will be released next week should be also important. So they will be watching this data, which somehow should have very important detail of what Fed may do next. Also, very big story for the risk of yesterday. Friday was obviously Silicon Valley Bank. It's one of the largest banks that failed since 2008 financial crisis. In this sudden collapse, the company is focused on lending and financial technology companies, and also it's the private banking service for high net worth individuals. So some are already comparing this to Lehman Brothers collapse, and now we have to ask ourselves if really Fed in this environment will be hawkish and looking for 50 basis point increase. Well, probably they will step up on brakes somehow and maybe looking only for 25 basis points. So that's why we were seeing this reversal on the US yields, which came aggressively to the downside, but the dollar did not fall that much. Okay, and the reason is probably because of stocks. So somehow dollar is going to stay maybe neutral, trapped between lower US yields and obviously lower stocks. So aside from the dollar, I think that safe haven is obviously Japanese yen. I think that when you have risk of flows, when you have lower yields, maybe look at some yen crosses that I will also take a look later on. But before we go to that, let me look at some of these important events with this Silicon Valley Bank collapse. Now, firstly, here's the Silicon Valley. You can actually see a very important and strong breakdown, which obviously is pulling down some financial sectors. Here we have this equal weighted financial ETF. You can clearly see that there was a massive very strong break to the downside, and obviously this could potentially put some more downside pressure on other sectors as well. If we compare this to the S&P 500, you can clearly see that correlation is very tight, and if this weakness will continue in these financial sectors, then obviously at some point other markets, other sectors will also follow to the downside, in my opinion. Now, if we take a look on the US yields first, you can clearly see that we are in uptrend in US yields, obviously, here on the 10-year, but I think that this recent reversal and latest events could potentially be triggering for more consolidation here on the US yields. I'm looking specifically, I'm tracking wave 4 and observing this trend line that is connected from start of 2022 actually. And if this trend line is broken, I believe that we could retest this swing support here around 3.3%. So for now, I think that as long we are holding this last week highs on the US yields, there is actually a chance that we will see further weakness. But if stocks will also move to the downside at the same time, then in my opinion, US dollar may not see any aggressive drop, could actually stay sideways, as I already highlighted earlier. Now, also the important is to look at some other bond-related instruments, and if you look actually at TLT, okay, you can see a pretty nice reversal pattern. Now, if you're familiar with the Elliott wave principle, always when you have a very strong move from the lows or from the highs, and then the next pullbacks is only in 3 waves, well, keep in mind that maybe this is a continuation away from the recent lows or highs. And if I label this for you, you can clearly see a very strong move to the upside, and then this pullback was only in 3 waves. So in my opinion, this could potentially bring more upside on this TLT. So it looks like that longer term bonds are maybe headed higher, while the yields are trading to the downside. And not only longer term bonds, we also have the 2-year US yields, which were actually moving significantly to the upside on Tuesday and Wednesday, but then even short-term bonds have seen a massive reversal. So in my opinion, this looks like a reversal signal. So as I said, normally this could bring US dollar to the downside, but the important is what is happening with stocks. Okay, we still have stocks here, so as long as the stocks are moving to the downside with the US yields, US dollar is not going to have any clear direction, in my opinion. Now let's take a look also on some of the wave counts here. Firstly, I will look actually on this correlation between, as I said, dollar index, S&P 500 and the US yield, since I've been talking about this a lot. Now, so here we have only the US dollar index, and now here we have US yields. So yes, US dollar came slightly to the downside, but not that aggressively. You can clearly see here that we are trading much higher here on the US dollar compared to the US yields. And now if we add this S&P 500, you can actually see that there was much further sell-off. So I think as long the S&P 500 in green and the US yields in red are trading to the downside, the US dollar index could actually be trapped in this some kind of neutral phase. We have to see normalization before we may of these correlations before we may say where US dollar could be headed. Okay, so as long as we have these current correlations in play, like you see in this chart, where you have lower stocks, lower US yields, it means actually that Japanese yen could do very well versus other currencies. So now let's take a look on the dollar index. Well, as I said, could be really challenging because of what is going on, but still looking at some big picture here, I think that there was a top here back in September 2022, we have seen an impulsive decline, and now we are in a corrective phase. So I'm comparing current rise to the previous correction here when we were in uptrend. You can clearly see that there is somehow similar distance. So maybe we are already at first resistance here at 106, but I'm afraid that we could potentially see more upside around 107, 108 would be the next resistance. But I'm seeing this as a correction within downtrend, and I think that sooner or later we will see a continuation lower. Okay, now let's take a look also on euro dollar. So euro dollar, obviously it's showing the very similar situation, the opposite side. I still think that that was an impulsive rise, and since market moved out of this upward channel, I think that you are now in a corrective phase. Now in corrections, I will always try to look for a retracement of minimum 38.2%, and this is still not happening. Here you have this former wave 4 around 38.2%, and this comes in around 104.90. Also keep in mind that this 104.90 at the start of the new year of 2023, we have seen a massive move to the upside, and these new periods of the new year, new quarter, new month are very important. Why? Because normally that's when a lot of portfolios or a lot of position adjustments are happening, and usually you will see a strong volume in, and that will send market in one direction. But what I really like is that to see this price coming back to this same area before the real direction can be seen. Okay, so I really think that this starting point of this year could be retested before we may finally stabilize here on the euro dollar. We also have the ECB. There's almost certain that they will go for the 50 basis points, but of course it's been so much said about this that obviously it's not important what they will do on this meeting, but what will be the message for further decisions on next meetings on upcoming months. So that's why maybe we may not see any kind of aggressive move. I still think that we are here going to see a corrective movement, and that at some point I think that this reversal to the upside could be seen. But as I said, maybe 104.80, even 104 could still be retested before bulls can wake up. Now cable is looking quite interesting. It had a very nice and aggressive bounce here in the last 2 days, and what I like just from a pure technical perspective is that actually we have seen here, if you look back at the start of the year, we've seen a very nice push to the upside. We clear out the highs just for a few pips, and then we came back to the downside, and I was observing the similar potential price action here at the bottom, okay, of this pattern. So again, we came back to these levels of the year that I just described on the euro. Okay, we clear out probably some stops, and now we are seeing a massive reversal. Still not really seeing a daily close here above this trendline resistance, but if maybe we can see a little bit of more slow price action here next week around this trend line, then I think that I will read this as a minor correction within uptrend, and I even could be looking for potential long opportunity while the market is holding this swing low. So if we suddenly see more dollar weakness, probably cable would be my first choice here. Also could be Japanese yen, obviously, if dollar would come to the downside. Now if you look at dollar yen, obviously it's still in this recovery mode, but I think it could be potentially even right shoulder. Okay, now moving into the resistance, notice that I'm comparing this right shoulder to the left shoulder, and that was the head. So clearly we are at a very important potential resistance area. We retested 38.2%. Higher one is around 50%. There you have 139, 140, very big psychological level. But overall, of course, it's not very easy to say that we exactly found the top here and we are moving straight to the downside, you definitely want to see some more bearish pressure first. But overall, I think that this is the contra trend movement, and that sooner or later we will see move to the downside. Now that there are speculations that actually Bank of Japan will adjust a yield curve control, maybe even remove it this year, and this could potentially then, as you know, trigger a lot more upside on Japanese yen. Keep in mind that inflation is coming to the upside, but the question is when this may happen. Well, maybe after new governor will take over Bank of Japan after April. Okay, so I think that in upcoming months this could be quite interesting pair for potential very massive, strong reversal, a strong reversal to the downside. Okay, now let's take a look also on CAD yen. Now I'm bringing on CAD yen because we know that inflation in Canada is coming to the downside. Bank of Canada said that they are going to be on hold with rates, but on the other hand you have speculations where investors think that maybe Bank of Japan should change their policy. Okay, and now when you have lower stocks, also lower US yields, okay, and even lower crude oil, well, this makes a very aggressive bearish case actually for CAD yen. So if you've been watching some of our analysis lately, I've been looking for this to be a wave 4. I highlighted 100 as a very important psychological, not only technical but also psychological resistance area. You had this 38.2%, you had this distance of a correction of wave 4 similar to wave 2. So this is normally the case in the ideal impulse, where you have wave 1 small, you have this wave 2 correction that should not break to a new high, then you have wave 3 usually extended, and when you have wave 3 very strong one like this, you can expect that maybe next correction will be similar to this wave 2, and that's why I was looking for this to be a potential resistance. And so far, if you look this trend line, we are broken down, and because we had daily and weekly bearish closes, I think that there is actually room to attack this 94 that goes back to the start of the year, okay, to January. Now since I mentioned crude oil also is still, I mean, it's sideways, but we could potentially see more weakness coming. What's interesting about crude oil is that here back in November, White House has released the fact sheet that they are going to fill their reserves between $67 and $72 per barrel. And exactly from there, we have seen a very nice rebound, but not really impulsive. It's, as you can see, choppy price action. And always when you see such a choppy price action, especially if you're looking more short-term charts, just make a step back, look where the main trend is. And you can clearly see that we triggered a massive reversal here after push to 130 area. After these energy price caps, we have seen a major reversal down, but now because we are just consolidating, I think that there can be more weakness coming. Maybe even $60 per barrel could be an interesting point for this year on crude oil. Also, keep in mind that opposite to what White House has been saying here in November, now we have this coming out in February that Biden administration said that they are selling 26 millions of barrel, and most likely from their reserves, and most likely they are going to refill back at the lower prices. So I think that this current environment is looking quite bearish, I should say, for crude oil, especially if maybe if we will see more risk of flows, then crude oil could obviously do the same. And lower crude oil means that CAD could feel more downside pressure as well, and that's why I repeated this earlier on CAD yen. Now not only CAD yen, if you look at ASEAN, this one is also breaking down from this bear flag. If you want, maybe it's an expanding diagonal, not really the perfect pattern, I should say, but I would not be surprised if we revisit these levels here around 87. Why? Because if you look closely, you can clearly see that there were plenty of overlaps here within this recovery. Okay, this recovery has been made in 7 swings. Okay, 1, 2, 3, 4, 5, 6, 7, and that's the number of corrective subdivisions. So I'm looking this to be a correction. Not only that, we have a confirmation of the breakdown happening right now. So I think that there is room, chance to revisit the $87 87 price here. Now let's take a look also on DAX. So DAX has been outperforming the US stocks recently, but now if these financials will really turn around and keep the bearish case for next week, then maybe even German DAX will see more weakness. Keep in mind that we have seen a very nice reversal last week, and now we are trading around this trendline support that goes back from October 2022. So this potential breakdown could take price into this corrective phase. So just be aware that maybe this bullish move is a little bit overextended and that we need some pullback. Keep in mind that there are actually 5 waves up, and we know that after 5 waves up, we should be aware of a new 3-wave setback, because nothing moves just straight in one direction. Okay, so always when you can spot potentially 5 waves up, not necessarily that we will see top immediately, but just be aware that maybe market is a little bit too high, too much of optimism was put in this German DAX, especially when you look at other global indices. So I think that even this one could potentially now signaling for a move into the correction, especially if we can break decisively, obviously, this trend line, which for now is not happening yet. Now let's take a look also on gold. Now gold is, in my opinion, a little bit sideways price action here, but still think that whenever US yields will give us more evidences of a very important major top, I think that that's when US dollar will come aggressively to the downside and gold could have much more attention. Even this could be already happening now. If stocks will see move to the downside, if US yields are coming to the downside, maybe gold will be seen somehow as a safe haven at some point. So I'm still seeing this as a potential corrective wave for very nice support around 1600. That was a very nice aggressive bounce. So I think that we are now just in a corrective phase here, and that we may see more upside maybe later this year. Looking at this daily chart, we came back, retested these swing highs. There was some choppy price action as well here at the end of 2022, so clearly very important level around 1800. We bounced from it for now only in 3 waves, so I cannot say that wave 2 has ended. I'm just aware that if we do not see any extension higher next week, that we could actually retest this 1800 and then maybe stabilize before we rally much higher. Now let's take a look also on the S&P 500. So the S&P 500, keep in mind that obviously we are here in the risk off mode, at least now for the last month or so, and I've been tracking this potential flat correction for a wave B or wave 2. So now you're seeing prices in ABC. So on the S&P 500, we are seeing here risk off flows away from this 4,200, and I've been looking for this temporary wave B rise into this resistance as part of a potential flat correction in wave B or wave 2, and in flats you will see that wave C can retest the ending point of wave A, which in our case comes in around 3,800. So I've been looking towards this level, and the reason why I was expecting this kind of a reversal is that because here back at the start of the year we have VIX here at the lower side of this 2022 range. So obviously there was no fear at all on that market back then when the S&P 500 has been trading up here. So obviously markets and Everything moves in cycles, especially sentiment. So if we respect the sentiment, then if something is just over bullish, over optimistic, then we should be aware of the opposite. And you can see that now fear is picking up. And now the question is, when will be the S&P 500 looking for potential supports? Well, when we will have the extreme pessimism, when we will have VIX trading at the upper side of this range, because clearly this has been the case through 2022. So now if we will be able to move into this area, I think that the S&P 500 could be potentially then already around 3800 potential support, when I would be expecting next potential bounce. Of course, if suddenly we will see just straight move to the downside and we will see some massive collapse happening coming down out from these financials, then obviously I will also look at this wave count, which shows that maybe we are in a wave for higher degree correction, and then 3,400 could be a support. So even this one, if we see any aggressive further weakness here in the next few weeks, even this one suggests that later this year we could stabilize and turn back to the upside. Also, we have Dow Jones here at the moment, which looks quite interesting. Very nice deep correction after this first impulse. You have this spike here going back to November 2022, and if we can retrace, we are actually already trading at these levels right now. So pretty interesting area here, 61.8% as well. So if we can recover from here, okay, from here in impulsive fashion, then I think that bulls will be back. But definitely interesting zone already being retested. Now finally, let's take a look on dollar Mexican peso. Now we know that Mexican peso is very sensitive to stocks, and what I've been seeing here at the end of the week is obviously a very massive strong reversal to the upside. But notice that we are here coming into this 2022 pandemic level that was broken here, and now coming back to a retest. But I'm afraid that we could potentially see more upside until this free wave correction is completed, because we know that wave 4 should be made by minimum 3 waves. So this trendline resistance goes back from 22.62, could be very important potential resistance for the next sell-off that could later on take us all the way back towards 1740, which goes back to 2017. So for now, that's still the downtrend, obviously, but we are just now in a corrective phase. I also have here this 4-hour chart, which shows that we are in a wave A. So as I said earlier, any kind of correction should be made by minimum 3 waves. So I think that you're going to see wave B and then another jump to the upside. But we should not break this trend line, because as long as this trend line holds, obviously the trend is down. If this trend line is broken here, then I think that bottom is forming. Okay, traders, thank you very much for your attention. I hope that you enjoyed this week ahead video, and talk to you next time. Bye.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.